amount of currency printed basis, I mean, gold's about as cheap as it's ever been. So we really have a long ways to go. I mean, if you want to go back on a sound money standard, you'd have to push gold up to about 20,000 the ounce, which is, eightfold what it is from now. And, we had a pretty good run from 2000 to 2011. Gold went from like 252 to about 2000. We had about an eightfold increase, sevenfold, something like that. So could it do it again? I'd say absolutely. So you could go, from 2,500 to, into the 1,000, 10,000, 20,000. Will it take place? I don't know.
Investors have long been enamored of gold, and its price has increased substantially over the past 50 years. While inflation has cooled recently, most experts think gold's price surge will continue through 2024. As the renowned publisher of the Morgan Report, DavidMorgan suggests that, although gold appears overbought nominally, it can reach up to $20,000 per ounce if aligned with a sound money standard. According to him, gold and silver have consistently been the most reliable assets during hyperinflation, while the stock market may offer some relief, but its effectiveness depends on taxes and government stability. From April 20th, 2021 to May 20th, 2023, we saw the first sustained period of high inflation in a long time. During that time frame, commodities returned 17.4%, gold rose 16.16%, the dollar increased by 11.90%, equities gained 8.80%, and Treasurys fell 5.85%. Once again, gold provided value to those holding it during high inflation, yielding higher returns than all other asset classes except commodities. Drawing on historical examples like the Weimar Republic, Morgan suggests that debt could be ignored amid currency devaluation if governments collapse. Both major political parties have demonstrated a propensity for fiscal expansion, with the national debt surpassing 120% of GDP under recent administrations. However, this trend will persist regardless of the presidential administration. Rising debt and potential economic slowdowns may lead the Federal Reserve to cut rates, boosting gold's appeal. In his analysis, Morgan explains that hyperinflationary depressions often follow inflationary periods in a fiat system, leading to high unemployment and declining living standards. He predicts that BRICS countries may try to back their currencies with gold, but this will not solve the underlying issues. The leaks and rumors weren't wrong. Russia just confirmed the launch of a gold-backed currency on August 22nd. This will be the first gold-backed currency in over 50 years. Now, we present the clips of DavidMorgan's insights from his recent interview. Before we continue to discuss this, please subscribe to our channel and activate the bell icon for timely updates.
I mean, the general idea is the only thing that's ever survived a hyperinflationary environment has been gold and silver. Stock market, again, mitigates it somewhat, but then, what's the tax situation? And then, of course, what's the government look like? I mean, the government's crumbling like in the Weimar Republic. And that's why, World War II came about with Hitler coming out and all that. We don't have time to go into it. But the idea is that, maybe you owe it, but people just say the hell with it. I got screwed by the currency system. It's not, whatever. So, I mean, there's a lot to unpack there. I won't go any further, but it could continue to go up. That's the point. And I agree it could. Well, a couple things. One is that there's an adage in the financial markets, especially on the tact I've taken it, looking at monetary history, all inflation's end in deflation. That's one. The other one is there's never been a time where you've had a true debt liquidating or a true deflation in a fiat system. If you have a gold standard like we had in the 30s, you can get a debt liquidating depression where currency actually became more and more valuable, but it was backed by gold. Not for the populace, it was confiscated and repriced, but for the international gold standard, it was repriced, and it actually helps. The prices actually came down during the 30s, but again, we were on an international gold standard. So, but when you're on a pure fiat regime, every time 100% it's gone into a hyperinflationary depression. Remember, I used the word depression. So you get a currency and you get the same things almost as you get in a debt liquidating depression or a deflationary depression. High unemployment, high uncertainty, huge jobless rate with a depressed feeling among the populace that things are bad and they're not going to get any better. Much more barter, lower living standards. What used to be taken for granted as almost a staple becomes scarcer. And then the only difference is in the one, hyperinflation, the currency fails, and a debt liquidating depression or deflation, the currency stays sound. And so the only currencies that stay sound are the ones that were backed by something. and this one isn't. Now, the BRICS may be able to mitigate some of this with their own, plethora of countries that have joined using their own currencies. And, there's talk of what they're going to do in this next meeting, where maybe they're going to back their currency 40% with gold. That's out on the web right now. Whether it's true or not, I don't know. I don't know if they know. But there could be the possibility, if there was a gold-backed currency, that, of course, the market would probably flood to it at some point in time. But then again, they don't have the debt market to supply credit to the system to rebuild. So is it a solution? I don't think it's a solution. I think it mitigates the problem for them or anyone that joins them. But I don't think it'll buffet the problem, but not cure the problem. I mean, on a technical basis, on a nominal number, gold's overbought and probably correct somewhat. Silver probably sympathized with it. But on a amount of currency printed basis, I mean, gold's about as cheap as it's ever been. So we really have a long ways to go. I mean, if you want to go back on a sound money standard, you'd have to push gold up to about 20,000 the ounce, which is, eightfold what it is from now. And, we had a pretty good run from 2000 to 2011. Gold went from like 252 to about 2000. We had about an eightfold increase, sevenfold, something like that. So could it do it again? I'd say absolutely. So you could go, from 2,500 to, into the 1,000, 10,000, 20,000. Will it take place? I don't know. And again, the powers that be want to keep power. They want to keep the money power. And all they have to do to make that happen is convince people to have faith in their system, the digital system.
Regarding the growing trend of central banks accumulating gold, DavidMorgan mentions that the East is leading due to concerns over the dollar. While public demand hasn't surged, central banks are steadily increasing their purchases. Morgan expects this trend to intensify as economic conditions worsen in the coming years. Central bank gold demand has been a critical pillar behind the precious metals' impressive rally this year, and according to one research firm, this trend is not going away. While the broader trend among emerging market central banks remains positive for gold, much attention is specifically focused on China, which has not announced any new purchases in the last 4 months following an 18-month shopping spree. Based on data, Morgan further speculates that the People's Bank of China's reported gold holdings may significantly underrepresent the actual amount, considering China's true gold reserves could be much higher. Let's get back to the interview.
All the top bankers know that's a given. The East does it more because they are probably more susceptible to, a dollar demise than the U.S. is until it happens. So there's more flows to the East than there has been in the West, although you look at, what's happened in central banks at large. I mean, they're all buying gold at a high rate. So they know that it's the money of last resort. They really, in my opinion, studied opinion, don't really want to use it. They're using it like, if you run out of everything else, then we can start the new system with, a gold backing. Is it 100%? Is it 40%? Is it digital? Can you be able to exchange your new digital unit for actual gold? No, you can't do that, but trust us, it's 40% backed by gold. Yeah, last time you did that, after Bretton Woods, it only lasted from, after the war in 44 till 1971 because you guys cheated. You're going to do that again. All that stuff comes into play, but I don't think the run to gold has started outside of the central banks. It's starting to go into the public somewhat, but the real run to gold hasn't really started the central banks. So I sort of contradicted myself. They're just starting to buy more than they have over the last 50 years, according to the World Gold Council. There's others that say that's a misnomer. It really wasn't that much. Regardless, the movement of gold is accelerating, but it's just starting to accelerate. As things get worse over the next 2, 3, 4 years, you're going to see the banks go more and more and more into gold. And whether, they report it or not remains to be determined. It probably will. But if you look at the People's Bank of China, I mean, they have 2.2 thousand tons of gold, 2,200 tons. But really, if you look at the aggregate of China, it's probably 30,000, because when the U.S. asks how much gold do you have, they ask the People's Bank of China what they hold. They give them the number, 2,200. But they don't say, well, how much gold is internal to the Chinese population? It's probably 15 times that. Silver is far superior to gold at this point in time. I mean, the gold-silver ratio is at 78 to 1. It takes 70 silver ounces to make an ounce of gold or buy an ounce of gold. And the amount of silver that's an investment form is about equal to the amount of gold, probably a little bit less. And so, especially in a barter type situation, or even not a barter, I mean, you can use silver, as money right now. So I think it's very undervalued, even if compared to gold, and it's affordable for almost anyone. So on a legacy investment going out 10 years or more, I think you could hardly miss with silver, buying it basically at the cost of production. If you can buy any commodity at the cost of production, or particularly under the cost of production, and have some patience, you're going to make out. I mean, you can't buy, name a commodity: oil, lumber, cotton, cocoa, sugar. If you're buying it at what the production cost is or less, all you have to do is be able to store it, keep it in good shape, and then wait, and the price will go higher. And that's basically the price of silver really is pretty close to production costs. And so you could go into the silver mining business just by buying silver and putting it in a safe, and then wait for the inevitable, for the price to reflect the scarcity of the commodity.
With a keen eye for economic trends and market cycles, market expert Robert Kiyosaki's forecasts offer valuable insights for precious metals investors. He presents a nuanced forecast for gold prices, predicting them to reach $3,700 in 2024 and $5,000 in 2025. How will the ongoing trends in central bank, gold purchases, and potential market decisions impact your investment strategy? Drop your thoughts in the comment section below. If you find this video informative, don't forget to support our channel and turn on notifications to stay informed about our latest videos. See you in the next video.